Firstly, I would like welcome you back into this room. I think we have. Sorry for the delay. Just give me 1 minute. Okay. Thank you for coming into this room on this topic: trade live with precise traders, price level system, or strategies. Which we have discussed. For those of you who have attended our session before, should more or less be aware that the system is a unique way of approaching the market, and you can use it. Of course, first time if you're coming in, it looks a bit complex, but the more often you use it, the more you use it and test for yourself, you can find it more easy to look at the system. And do take note of the risk disclosure. Okay, this is going to be purely education for those of you who wants to try out the system. Okay, what I would suggest is probably you may want to do it on a demo account to see how effective or how easy to use the system together with the strategy. Okay, and do take note for those of you who are coming first time. Okay, we focus all in all about 36 crosses. Okay, we focus on euro, pound, dollar yen, dollar Swiss, Aussie, dollar CAD, New Zealand dollars, and Sing dollars. And we also focus on the crosses against each other. And the theory behind our approach is, we use the price level principle, or PLP in short. Okay, basically it's the invention which we have done. We have done the R&D over the years, and in fact last month we have shared with. In fact, first time we tried. We shared with FX Street. So for those of you who have attended the session, you know what I'm going to talk. But for those of you who have not attended the session, what I would suggest is probably you may want to go and view the recorded session to get a clear picture. And also do take note that our approach, or the way which we derive the zones or levels, is we use Fibonacci, Andrews Pitchfork, moving averages, trend channels, Elliott wave, and Gann numbers. So basically what the system does is, the system helps you to trade with, in fact, I would say, emotion free to a certain extent. Okay, how do I mean by that is because the system helps you to decide your entry, exit, and stop loss. But of course, before you decide on the entry, the only work you need to do is you need to decide whether you want to be a buyer or seller, because that's the critical component, and that's what that makes, to decide whether the trend is in the right direction, or whether it's going to be stopped out, or whether you're going to make money. But what I would suggest from experience, for those of you, in fact, I do have some clients writing to me, saying that they do not practice, or they do not believe in putting stop losses. Okay, from experience, okay, this is something, it's a word of caution which I would like to highlight to you. Please always try to put stop losses, so that at least that the capital is protected at all times. Okay, another thing I wanted to also highlight is, before you decide on a trade setup, you must also identify, know thyself, meaning you must ask yourself what kind of characteristic you have, and based on that you have to decide on what type of trader you want to become. Basically whether you want to become a day trader, or you want to trade swing trading, or even a position trader, meaning in the sense you want to hold on to your trade. It all depends on what kind of character you are you have, right? Okay, another thing I also want to say is, before you decide on a trade, okay, let me change my screen. Just give me 1 minute. Do what the market gives you. Okay, that means if the market is being very nice to you, accept it, take it. Sometimes the market becomes a bit tricky, and it doesn't really give a good clue for our trading decision. On that scenario, we have to be nimble or we have to stay sidelined. All right. Okay. And just to quickly, I just want today we are going to discuss on live markets. We are going to discuss on live trades. Okay. What I would suggest is, please try to be with me so that if you have any doubts, any queries, you highlight straight away. I would be able to clear your doubts. Okay. Before I proceed, okay, do take note that in fact we have okay, what are being a day trader. In fact, see, the tricky part of being a day trader is especially if you are a day trader, okay, you have to be very precise on our stop loss. Okay, in fact, what I would suggest is the best thing to do is predetermine your stop loss before you take an entry. Okay, what do I mean by that? That means, before a trade is taken, ask yourself, where is it you're going to put your stop? But of course, the system would help you to choose your stop. But again, it all depends, whether you're being, you're following the system, or, you want to be a bit stingy on your stop loss. Because see, what happens is, especially, if you're a day trader and even if you're a scalper, what happens is sometimes your winning trade would become a losing trade, and eventually, there would be an opportunity, but, you tend to lose an opportunity, So if you look at this for a scenario, like for example, today we took a trade on pound. Okay, in fact, we did a buy expecting the market to went up, but what happened was, the market is right now it's already making money, in fact, it has made about 65 pips, but what happened was it moved, and the moment, once it moved, once we raised our stop, we got stopped out, and it was a break-even trade, but supposed to be a winning trade, but became a break-even trade. This can be a frustration. See, that's where I'm trying to tell you that, you have to determine your stop. So once you determine your stop, then your entry, then your risk, then of course, from there, you can decide on your rewards. Okay, now, let's go back to this. Today, in fact, we have a BOC rate announcement, which is, which is going to happen in another, about 3 hours. So, of course, if you want to trade on this cross based on the news, you can be, but of course, you must be aware of the risk. But again, if you want to be very precise, or very you want to be on a conservative side, then probably what I would suggest is stay sidelined during that announcement. But other than that, we do not have any other news. Okay, in fact, we were expecting, today we were expecting the dollar weakness to happen, and it did. In fact, the dollar weakness has already started. Okay, this is something, whereby we give a trade preparation, meaning in itself, to get ourselves prepared on the markets, so that before the move happens, then we can anticipate, then we can trade with ease. Okay, like for example, okay, let me show you, before that, let me show you this screen. In fact, we have an alert. Okay, let me scroll this down. In fact, if you look at now, dollar is being the weakest cross, and with that, Swiss franc and dollar yen is being the strongest. So this two cross would be a very good cross to trade right now at the moment, because these are the two crosses that's giving. And again, if you look at the yen crosses, I think it has made a registered high in the morning. So we still expect the move to happen. So I think we can go ahead on this. And in fact, the dollar Swiss has made a low this. So I think probably we have to be a bit careful on selling dollar Swiss. Okay, now, how do we trade? Okay, I think we choose any one of you. Any one of you wants to choose any cross, then probably I can pick that cross to trade. I leave it to your choice. Okay, prior to that, okay, like for example, let's say euro, what is it we expected? Okay, okay, you want New Zealand dollar, right? Okay, let's do New Zealand dollar later on, but I just want to do one example on this euro, the major, so that for majority of the people would be benefiting from that. Okay, euro is within a range, but on a downtrend on the daily. This is a daily time frame, and on the hourly, it's in a corrective up mode, and 130.75 and 131.95 are the bearish violation zone. So basically, on the hourly trend, as long as these levels are not breached, then we are still expecting the price to come off. So this is the violation zone for the bears. So this is the level we have to pay attention to. And the patterns on the hourly is creeping higher and may continue. Okay, this is where we feel what is to be expected for today and how can we look to trade this. So the patterns on the hourly is creeping higher and it may continue. That means we are expecting the euro dollar to continue higher, and the 15-minute is also creeping higher but having huge barriers, right? So of course the barriers would be near the bearish violation zone, which is 129.15 and 129.60, and in fact the high registered high is about 129.80. In fact it broke that level. So then we have to assess the market to decide how to trade on this. Then again, the PT anchor low and high, okay, this is a trigger level, or this is where we can use as a guidance to decide on to see for our entry. That would be one of the least risk entry level, and in fact the market right now is trading at 129.60, right, and it's trading about 45 pips away from this. Now we look at the market and we see how can we trade this cross, whether should we look to buy on dips or buy on pullback, or whether to sell. It all depends on the market condition. Okay, before we go to the market, look at the market. Okay, this is what we would want to do to check the levels. Where would our entry be, and where would our stop loss be, and where would our exit point be. And remember, before we take our trade, okay, it would be good practice to decide on your stop first before your entry, because that's what would help us to decide our risk reward, and that would also help us to eliminate some of the emotions, right? So looking at this US session report, okay, we have zone 1. Remember, the zone 1 and zone 2 levels are the levels for entry. Okay, for those of you who are coming new or first time, okay, how many of you in this room are coming first time? Do let me know, right? So I can, if I have the time, then probably I will explain to you. So this is the set of numbers, and basically our entry is triggered at either the anchor low or anchor high, or at our zone 1 and zone 2 levels, right? So if in fact we have our zone 1 and zone 2, which is at 129.25 and 129.45, and support zone 1 at 128.55 and support zone 2 at 128.35. By rule of thumb, okay, this is proven, and this has been done in our system. Okay, you can use it as a guidelines. Always, if we are planning to go for a buy, okay, let's assume we are going to go for a buy, check the registered low. Okay, either you can check the registered low or the session low. Okay, either these two, and you must always ensure that this registered low is above our support zone 1 and support zone 2 levels. Okay, the reason why we are doing this check is because, okay, we have been doing this R&D for almost, I think it's going to be almost like 7 to 8 years, and we have noticed that usually the registered low would happen above the zone 1 and zone 2 levels if we are bullish, and the same thing applies. If we are bearish, then the registered high and low should happen below the resistance zone 1 and resistance zone 2 levels. So in fact, today's registered low is 128.37. In fact, that was a day low, and if you look at the session low, is even, I think, is also higher. So I think definitely this condition is fulfilled. And also do take note that we need to have a variance of between 1 to 2 pips as a variance, because most of the time you see that the market reverses or turns precisely at the level. So in other words, if we want to book our profit, so I would want to give leeway, meaning that I do not want to miss my price target, so I would reduce my price target by 2 to 3 pips in the event I want to book my profit. In the event I do not want to get stopped out, then probably I would add on, if I'm a buyer, basically, because I do not want to get stopped out, so I would add on to the levels. So this is another way of looking at the market. Okay, now what I would want to do is just write down all these levels, then we look at the market, then we decide whether we want to be a buyer, seller, or stay sideline. Okay, whichever is all depends on the market conditions. Okay, the levels are zone 1 and zone 2 levels, because right now the market is already moved up, right? So it's 12925, 12945. Please write down these levels. Then we have zone 4 levels, which is 13005, and zone 5, which is 13030. So these are the 4 levels. And on the downside, for my stop, I remember I said, if I do not want to be stopped out, then I would want to place my stop below this level, which is 12855, or Europe resistance zone levels, which is 12910. Okay, so just write down all these levels, and before I go to the live market, I just want to look at, okay, probably, maybe what I can do is I'll show you the dashboard, that will be much more easier, Just give me 1 minute, let me change my screen. Okay, so this is the levels. Okay, the dashboard is, what it shows is, it shows the live price together with the report. Okay, so basically if you look at this is the Asian session dashboard level. So it's in fact 12910 and 12890. This is where I would want to put my stop if I do not want to get stopped out. Okay, don't get worried, because you might be wondering that I'm giving you too many levels, but you must understand that this is a number game. And you must also understand the fact that this is probability, and when we trade, we should be trading with confidence, right? So that's how we can maximize our potential on this business. So in fact, we have the Asian session zone 5, which is 12995. So that's another level, So I repeat, 12890, 12910. Okay, this is where I want to put my stop. Okay, my price target anywhere before about 12995, and let's see what was the other level, and 13005 and 13030. Okay, these are the levels where I would want to book my profit. Okay, my stop loss, remember I've already decided is going to be below 12910 and 12890, and my price target is 12995, 13005 and 13030. These are the 3 levels where I would want to book my profit. Okay, now let's go to the chart. Then we decide what to be done and how can be traded. Okay, before we trade, before we initiate a trade, there's only 2 things you need to find out. One is to check the trending mode. Remember, the words mentioned on the report is we only update twice a day. Excuse me. So and I think before we initiate a trade, we need to check ourselves to see whether the market is, whether it's in a trending mode, whether it's in a corrective mode, or whether it's in a range mode. And what we do normally is we use a 2-hour chart. In fact, we use a 2-hour chart on a higher time frame and a 15-minute chart. So these are the two time frames which we use to decide, to determine these levels. By looking at this, how many of you feel that this is a trending mode on hourly? And remember, earlier on I read the euro. Okay, in fact, hold on. Yeah. So in fact, we see here the hourly is in a corrective up mode. This is where we have already helped you in deciding this. So basically, this is a corrective up, and so it's going to up, and it's going to be the upside is going to be limited, and these are the levels, key levels to maintain our bearish violation zone. So these are to maintain our bearish view. These are the key levels. But right now the market is trading at 12955. So what am I to do? So now, based on this, if this is a corrective up, so basically I'm expecting price to move up, eventually come down. But we wouldn't know how far the market is going to go up, right? So if we look at being a day trader, see, in fact, being a day trader, we apply a 15-minute chart in all our decisions, and that's what we do. So if you look at a 15-minute chart, this market has been rallying on the 15-minute chart, and maybe can we highlight our levels of price target? Then we can decide what to be done. Okay, just give me 1 minute. 12995, 13005. Just give me 1 minute. I hope I'm not going too fast. For those of you who feel that I'm going too fast, you let me know. I can slow down a bit. I'm not getting this highlights. Just give me 1 minute. Okay. Then the next level is 13030. Okay, when I just give me 1 minute, Okay. Anyway, take down this note. Okay. 13030. Okay. Now the market has risen up. These are our price targets. Okay. 12995, 13005, and 13030. So if I looking at my stop 12910, remember below 12910 and 12890, this is where my stop. So if I draw all this into this chart, now you tell me where would I want to enter, and where would I would want to put my stop, and where would I want to? And remember, our stop is fixed. That means, if I want to be a conservative trader, then what I want to do is I want to put my stop below 12905. And if I think, I do not want to get stopped out, then of course the best level to put my stop is 12885 or 83. Yeah. 80, 85, 87, below 90, below 90, this is where I want to put my stop. Now, can anyone tell me what would I want to do on this market, knowing my stop loss, knowing my price target, what should I do, or what would I want to do? Can anyone tell me? Okay, if you call yourself, you want to go buy at 129.45, then you know that your risk is, you have to put, my stop loss, I have to put, remember, I have to put a stop where I do not want to get stopped out. You can't put a stop loss or stop whereby, there's only so much I can lose, or there's only so much I'm prepared to lose. That's not the right way of doing things. So you have to know that, I do not want to get stopped out on this trade, so this is where I would want to put my stop. So assuming my stop loss would be at 128.95, right? And my price target is below 129.90. So anywhere you can do. Let's say we can do. Okay, if I'm going to trade this trade, okay, probably you must also understand that sometimes when we take an entry, you must also be okay. Now I have one person giving me an entry of 12910. See, if you put an entry of 12910, of course that would be the safest. But my question is, what is the guarantee of you getting that level or getting that level filled? If you do that, what will happen is chances are you may get frustrated every now and every time you put an order, then the order is not filled, then later on you might be missing, then what will happen is there will be a time whereby you get take an entry out of frustration. So what I would suggest on this kind of scenario is, the best thing to do is probably practice proper money management. Basically, use a scaling in. What I meant, scaling in, scaling out means, try to take maybe 30% of our usual entry around this level. If it drops some more, then maybe add on another 30%. Then if it drops some more, then add on another 30%. Remember, our stop loss is below this. So when you do this, then if the market starts to rise above this, at least we are in this trade and we get about that 50 pips, which is supposed to be still considered a good trade, but without missing any opportunity. I hope you understand what do I mean by that. Okay, now, how do I know whether this would be a good trade, or whether this trade is everything the system is followed? Of course, after knowing the low, after identifying the low, then straight away we have to identify what strategy are we going to use. Okay, on this scenario, this is the strategy S, S. Okay, maybe I'll show you change the screen. Okay, this is our strategy S. Sorry. Basically, the low did not touch our support zone 1. That means, the low is greater than S1. In fact, our support zone 1 is, in fact, for this morning is 128.20. Did not even reach that level. So this is the supreme, meaning in the sense this is going to be a very strong move up, which it did happen. Alright, and the low is greater than or equals to anchor low, and all these conditions would be fulfilled. And of course, our entry should be, we can use any one of these levels, greater than open, greater than R1, which is the resistance zone 1, or greater than anchor low high, any one of this depending on the market conditions. Okay? Are you all with me? Any question or any doubts? So in fact, how would I be trading this cross is, I've identified the strategy and I have identified that this is going to be my price target. I've identified that this is going to be my stop loss. So then the proper money management is what that is going to help us to decide on our trade, and by doing this, then we can trade without emotions most of the time. See, remember, we are working on probability, and we are working on, we are playing this game, with whereby, and also we need to look for high probability, high probability trade setup, and when we do it consistently, then you know what I'm talking about. Okay, the question is, the dollar weakness which is happening now is instant weakness, or will it stay for a while? Okay, as I told you, this is right now is a corrective up, and this is for the day trading, and this is day trading. So whatever you make is best for you to book your profit, and also you must also take note that our levels, bearish violation zone levels are 13075. So we still have another 130 pips. So the market can reverse anywhere before reaching that levels. So that level we have given you, the target. So, and that's where we go. The decision of the strategy. Okay, the decision of the strategy is very simple. Okay, in fact, like as I told you earlier on, we decide on based on the registered high and low, and the strategy is decided based on the registered high and low, and also based on the trend mode. The trend direction mode, meaning in the sense whether the trend is in a range mode, or corrective up mode, corrective mode, or trending mode. So when you know the registered low or registered high together with the trend definition, then we are able to identify the strategy very clearly and very precisely. So in fact, if you notice, in fact, today's registered low, what I meant is registered low is on your, for the registered low for the day. In fact, the registered low for today is 12837, right? And in fact, let me change my screen. In fact, our support zone 1, okay, support zone 1 for the day session is 12820. In fact, the low did not reach our support zone 1. So that's where that's how we registered, that's how we decide on the strategy. So once we know the trend definition, once we know the levels, and once we know the strategy, then we are ready to go, because the strategy is what that helps us to decide on our exit entry, so that's where we use. So it all has to go hand in hand, everything has to go together, then we have a very clear picture, and you can trade with ease. What is the registered low and high? I think I've already showed you. Okay, this system, like we have been doing the system R&D for, in fact, it's more than 10 years. And this system is purely designed, I would say, for day trading. Not you can use it for scalping as well, but mainly for day trading. And especially if you know that day in, day out. Okay, not like you hold your trade in a few hours. If you hold it for day in, day out, the system would help you to choose accurate entry and exit. Okay, now your question coming back. Sorry, no, your question is New Zealand dollars. Okay, New Zealand dollars. Looking at this, in fact, the New Zealand dollars had started to move up above the resistance zone 1. Okay, we have zone 4 which is 81.70, zone 5 is 81.90. So these are the levels whereby we need to book our profit. But prior to that, we need to look at the trade preparation to have a rough idea, what is to be expected on that cross or on that particular currency. So here, if you look at New Zealand, it's in a downtrend on a daily with a range mode. The hourly is in a range mode and we have a bearish violation zone. Remember, the hourly is in a range mode with the bearish violation. That means, if the market goes up, then we should be looking for selling opportunity. What is so important? What is so important is the last three sentences. The hourly patterns are suggesting that downside may be limited. Okay, this is a key word. The hourly patterns are suggesting that the downside may be limited. That means we are expecting the market to move up, or get a bounce. That's what we meant by the downside is limited. The 15-minute is in a range until the breakout, and in fact, I wouldn't know whether the breakout has happened. Probably we go and check on the chart to confirm that. And the bullish violation zone are 80 and 80.40, and right now that market is trading at 81.30, and in fact today's low is 80.47, which happened exactly at our bullish violation zone. So that would be very good an opportunity. And the PT anchor low and anchor high is 8065 and 8105. Okay, basically it's in a range and we need to find out whether that market has broke out of the range. Okay, let me check on that. Okay, now you tell me whether has it broken out from the range or it is still in a range. See, on the hourly is still in a range, is still within this range, this high and this low, right? But on the 15-minute, early on, we said that it's still range and it just breached that level. In fact, it just breached that level. So we have that 81.70 and 82.05, and in between we have about 81.90. These are the key levels. So again, applying the same principle, remember this is a range trading. So the best thing to do is, range trading is, of course, when the market moves up, you go for a short. When it goes down, go for a long. But right now, it's a bit tricky, of course, because of the dollar weakness is happening all around. But why would, we want to trade this cross when there is other crosses giving better signals? So as a result, what I'm trying to explain or what I'm trying to tell you is choose the cross that gives you a best opportunity and good opportunity rather than choosing the cross that you like to trade or you prefer to trade. Because remember, we must always be, with the market, and always remember that the market is always right. So we have to stick to the market at all times, right? I mean, of course, we can we can have our preference. I'm not saying nothing wrong with that, but that would not help us to make money. The only thing that helps us to make money is by following the market and sticking to the rules and trading with the trend. All this is what that helps us to trade, helps us to make money. You have to trade with momentum. When the market is giving good move, trade that cross rather than you want to choose that is caught in a range, right? The question is, at what zone does price need to go after a low is put in for it to be classed as a registered low? Okay, okay. This is, I would say, is a good question. In fact, because sometimes it's so difficult to differentiate. Whether the registered low has already been seen or we have to wait. The only valid answer I can give you for this question is, look at the higher time frame. Look at the higher time frame, then that helps you to decide. Use the opening price principle, okay? Because all our analysis, all our approach, we use opening price principle. That means we use the opening price, a price level principle, but then we use opening price principle as very important. That means we use the opening price as a guideline. So if, let's say, if you're looking at this cross for this time belt, let's say I'm looking at a 2-hour chart. Now, you tell me, when I look at a higher time frame and the market is trading now, you tell me whether the registered low has already been seen. You see, the market has made one candle up and we are into the next. So when we are into the next time belt and the market moves away, in fact, that is where, in fact, if you feel like this is where the registered low happens, okay, then what we can safely say is use that opening price as a guideline, and together with our anchor low and anchor high would tell you that whether the register low has already been seen. Can you understand what do I mean by that? Okay, perfect. I think you got it. Right? So that's the rule of thumb. That's the guideline which we use to decide. Of course, now you see, it's a very good question, because right now the market is touched the high, but this is a registered high right now. But how would we know whether this is a registered high? Is what we should do is we should wait for this time belt to finish, and we should wait for the next candle opening price. And if it starts to trade below that open and below that the anchor low, then the registered high may have already been seen. Until then, there is a very high probability that this market can still go high and can still break the high. All right. So I hope I have cleared your doubts on that. Okay, any question? So for those of you who are coming first time, okay, of course, I do understand that it looks very complex, but in actual fact, if you know what you are doing and if you are on the job, you would know what I meant by that. Then you can trade with ease, and you can trade without emotion. Why is best to check trend on 2 hours and 15 minutes? See, it's not. See, our system has been designed, and we have done the R&D, and usually we do not practice 1 hour chart, and 15 minute. I think that would be if you want, you can use a 5 minute, but of course, for my personal trading, usually I use 15 and 2 hours, and I've been using and comfortable with that, and I've been using this for many years. So it's your preference, right? 1 hour, like as I told you, 1 hour I feel is too short, in fact, to do, and usually you see a lot of whipsaws. Let's say I do a 1 hour chart on this compared to this. You see, literally all this to me is all these are noises, and when you do a 1 hour, you get carried away. Of course, if you do 2 hour, the whipsaws is you're also giving a much longer time for the price to work towards your direction. So that's another way of looking at. Okay. Any other questions? So if you have no questions, okay, once again, thank you very much for coming into this room. I hope for those of you who are doing so, not to worry, we will be doing more of these sessions, because right now, and of course, I would like to thank FX Street for organizing this wonderful event. and looking forward to see you again, because if you come, definitely the more often you use it, the more easy you approach the market, and the more easy to initiate the trade. And of course, you would be trading without emotions, because end of the day is, and that's what everyone else wants to do. Okay. With that, I conclude the session. Once again, thank you, FX Street, and have a great weekend. Till then, goodbye. This is Raju from Precise Trader. Thank you.